Every real estate investor loves to talk about cash flow, appreciation, and those big ROI numbers. But here's the uncomfortable truth. None of that matters if your books are a mess. Poor bookkeeping destroys deals, makes investors nervous, and invites the IRS straight into your portfolio. Today we're going to explore the CPA Playbook for real estate bookkeeping. I'll show you how clean rent rolls, accurate accounting, and audit-ready systems can protect your wealth, reduce your taxes, and help you secure financing faster. This isn't surface-level advice. It's the exact system CPAs use to keep professional investors one step ahead. Whether you own one rental or manage a portfolio worth millions, this video will change how you think about real estate accounting. So let's dive right in. Why bookkeeping is the foundation of real estate wealth. Bookkeeping is not just paperwork, it's the operating system for your portfolio. Without it, you're essentially flying blind. Think about it. Your rent rolls, expense reports, and reconciliations are what tell the real story. Did your tenants pay on time? Are your expenses slowly eating away at your NOI? Can you prove your deductions if the IRS comes knocking? The reality is simple. Clean books influence everything. They determine how much tax you pay, whether banks approve your refinance, and how investors view your credibility. A strong bookkeeping system turns chaotic numbers into a machine that fuels long-term wealth. Now moving forward, let's talk about the heart of real estate financials, your rent roll. If your financial statements are the body, the rent roll is the heartbeat. It records who your tenants are, how much they pay, when their leases start and end, and whether they're paying you on time. It sounds simple, but this is where most mistakes happen. We've seen rent rolls with missing tenants, outdated leases, and deposits that mysteriously vanish. And when lenders or auditors catch inconsistencies, that's when red flags fly. Here's the better way. CPAs reconcile rent rolls monthly with lease agreements and bank records. That means every dollar lines up. The result? Total confidence from lenders, investors, and even the IRS. Now that we've established the importance of rent rolls, let's move on to bookkeeping itself and why CPA-led accounting is a completely different ballgame. CPA-led bookkeeping, what makes it different? Most investors think bookkeeping is just keeping receipts and handing them over at year-end, but real estate is unique, and generic bookkeeping doesn't cut it. A CPA looks at your books through the lens of tax law and strategy. For example, a roof replacement isn't just a big expense, it's a capital improvement that must be depreciated. On the other hand, fixing a leak is an immediate deduction. Mixing these up could cost you thousands in taxes. CPA-led bookkeeping also ensures you're reconciling income and expenses monthly, not scrambling once a year. And they track something most investors overlook: basis. Basis is the adjusted value of your property after improvements and depreciation. Get it wrong, and your capital gains calculation at sale will be way off. So bookkeeping done by a CPA isn't about recording the past. It's about shaping your future returns. Let's talk about one of the biggest fears for real estate investors: IRS audits. Audit risk and how to stay protected. Let's face it, real estate investors are prime targets for audits. Why? Because properties generate complex deductions, depreciation schedules, and partnership filings that the IRS loves to scrutinize. The top triggers include reporting losses year after year without proving you're active, sloppy cost segregation studies, or claiming expenses without receipts. The CPA Playbook prepares you long before an audit ever happens. You'll have pre-audit checklists ready: tenant ledgers, signed leases, contractor receipts, bank reconciliations. You'll have internal controls, meaning clear approval trails for every expense, and you'll have monthly compliance monitoring, not last-minute panic in April. This means when the IRS shows up, you don't stress. You hand over clean, organized books and move forward. Speaking of moving forward, let's revisit rent rolls, because optimization is where you unlock even more power. Optimizing rent rolls for maximum credibility. Rent rolls aren't just paperwork, they're marketing tools. They're what lenders and investors look at first. And if they see mismatches, missing info, or inconsistent formats, they lose trust instantly. That's why CPAs use standardized templates across all properties. Every rent roll looks the same, and every tenant is tracked the same way. And each month, those rent rolls are tied directly to bank statements and tenant ledgers. This prevents small errors, like a missed deposit, from snowballing into massive reconciliation problems later. The bottom line? Optimize Optimized rent rolls mean your portfolio is always investor ready, lender ready, and audit ready. Now that you see the power of optimized systems, let's shift into the bigger picture, the strategic value of working with a CPA. The strategic advantage of a CPA partnership. Here's the truth. Bookkeeping, when done right, is more than compliance. It's strategy. With CPA support, you're not just recording numbers, you're unlocking opportunities. You link bookkeeping with tax planning, turning expenses into deductions, and timing depreciation for maximum savings. You hand over professional investor reports that build confidence and attract capital. And you focus on growth, while your CPA makes sure you stay compliant and optimized. Now, before we wrap this up, let's quickly cover the most common mistakes that investors make in bookkeeping so you know what to avoid. Common mistakes that kill real estate books. Here are the mistakes we see over and over again. Mixing personal and property expenses. Forgetting to file 1099s for contractors. Misreporting depreciation or not tracking it at all. Treating capital improvements like repairs. Each of these mistakes costs you money. They increase audit risk. They weaken investor trust, and they limit your ability to refinance or sell at top dollar. The good news? Every one of them is preventable with CPA systems. So here's the big takeaway. In real estate, clean books aren't optional. They're your competitive edge. Bookkeeping is the backbone of tax planning, investor trust, and wealth protection. If you want stress-free audits, stronger financing approvals, and more money in your pocket, it's time to stop treating bookkeeping like an afterthought. Treat it like the engine of your real estate business. Book your free consultation today at Gavtax.com, and let's keep your rent rolls clean, your taxes minimized, and your wealth growing.